Hello, everyone. Good morning. Hello, if you can hear me, good morning. All right, please, if you can hear me, you can unmute yourself and then I need the voice right now. Good morning, if you can hear me. So, sorry, we're starting a bit late. There were some technical issues, so we decided to sort it out first before we start. So let me know if you can hear me. It means nobody can hear me. Okay, this is Emmanuel from Rally Trades. We're about to start right now. Unmute yourself, talk to me, please, if you can hear me. Okay, fine. I can see you from the chat room. Thank you. You can hear me. So just like I said earlier, apologies for starting a bit late. We're having some issues, so technical issues. So we've been able to resolve that. So we are starting right now. So guys, good morning once again. This is Emmanuel, reaching you from Port Harcourt City. So let's just jump right straight into it now. Let's start from fundamental analysis. So yesterday, the money market review was quite awesome. It was quite interesting, expository. So today's money market review also promises to be that, just the same level of excitement, okay? So guys, let me share my screen with you real quick. So please just check. I've been able to share my screen with you. I'm sure you can see Forex Factory. So this is Forex Factory, and this is for today, Friday, 13 September 2024. For those of us joining us for the first time, this is what we always do. We do this in the morning, trading day from Monday to Friday. What we try to do is we try to analyze the markets, give you some tips and, of course, some tricks to give you previews and also reviews of what the market has done so that you can be able to trade profitably on the market. Okay, so for today, Friday, as you can see, this is the date of the news. This is the time of the day the news will be released. This is the currency of the news, not currency pair, but currency. This is the impact. The impact is the volatility. So usually we try to look at for high volatility news. High volatility news comes in a red flag. So for today, we are not seeing any red flag yet, but we are seeing some medium volatility news, and that medium volatility news is this color here, brown. So we have a consumer sentiment, University of Michigan consumer sentiment that can also impact or have an impact on the on the currency we trade. Okay, that can also have an impact on the dollar. Okay. So it's medium impact actually. So that's consumer sentiment. So we'll be expecting the result of the news that will be by 3 p.m., right? But it's medium impact, so it will not be that high volatility. That means it will not move that much, even though it will try to shake the place a little bit. Okay, guys? So I will not advise you to trade, to use the straddle method on this one, buy, stop, and sell stop. No. You just do your normal trade and of course put stop loss and take profits. So I think for yesterday, let's see what we had for yesterday calendar again. So these are the news activity for the course of the week. Today is Friday. So for yesterday, we had quite a good number, right? A good number of red high impact news. I want to believe it's all go well with you. So we have yesterday, we have refinancing rates, right? Then of course we have monetary policy statement for the euro. Then of course we had PPI producer price index. Then we have unemployment claims, as you can see. So unemployment claims for the US came out as higher than expected. As you can see, 230 bigger than 223. That was the reason for the weakness we saw. For example, GBUSD was just going up and up and up, okay? Then, of course, ECB, European Central Bank press conference, that was by 1:45. So these were the news we saw yesterday, high impact news. Then for today, there is actually no high impact news except for this medium impact. So we actually hope for technical analysis to have the day for today, okay? For the market to move in a technical manner, right? So guys, I think we have enough time to analyze a lot of instruments technically. Okay, so I will share my screen right now so that we can do that real quick. So I will share my screen right now so that we can do that real quick. So hold on for one sec. Let me share my screen. So guys, I've been able to share my screen. So I think we have enough time since we didn't discuss lots of the fundamentals, since there is no high impact news. So we have enough time to discuss this high impact, this technical analysis very well. So guys, if you can see my screen, let me know if you can see my screen, full screen, no terminal, no market walls, just having a full screen so that we can do a lot of analysis here. So guys, let me know if you can see my screen. Just type chat if you can see, please. So you can also see my screen, that's fine. So let's start from what we have here. So let's start from the H4 time frame, or we just go straight to the instrument so that we can analyze a lot of them. Let's start from Euro USD. Let's do Euro USD, guys. Euro USD on the H4 time frame, right? So one of the elementary way of analyzing instrument is just what I have on this screen right here. Very elementary, and that elementary is called market structure. So it is just you blocking your ears to all of the noise on the market, and then look at the chart for what it is. And of course, try to look at the highs and the lows, try to make sense out of it. The market trading above the highs, it means the market is gaining momentum. The market trading below the lows, the market is gaining momentum to the downside. The market keeps trading below the low, the market is on a downward trend. The market keeps trading above the highs, the market is on an upward trend. So, guys, you, especially the new ones here or the newbies here, you can start trading like that. It makes trading easier, right? It makes trading easier. So I think it makes trading easier. So if you look carefully, we saw what happened or what is happening on Euro USD, right? Euro USD. Most of you're already in tune with the kind of analysis we do here. So let me run fast without much explaining of the analysis, okay? So let me run fast, really fast, so that we can cover maybe up to 5 to 10 instruments for today, okay? Like I think on Wednesday, we covered just two. Okay, no, three. Yeah, three. Euro USD, GP USD, and gold. And we were able to place trade on GP USD, right? We'll put stop loss and take profit on that trade. So I think that was when we had the CPI. There was CPI on that day, on Wednesday, and they will place trade on that. So I don't know whether your own trade turned out to be profitable. But over here, mine turned out to be profitable. So guys, look at what we have here. This was the previous high. As you can see right now, the market has violated that high. I mean, the market have traded above that high to form a new high, right? So take note, the market trading above a high to form a new high, right? We call that a break of structure, right? We call that a break of structure. So we've seen a break of structure on the market right now, on the H4 time frame. And H4 time frame rules the H1 time frame. It rules over the lower time frame. So that means even though there are retracements and you can trade against the trend and make money, but at the end of the day, the larger trend is still the H4 time frame. For an intraday trader, for a day trader, a trader that wants to take advantage of the move we have on the market, the daily move, the up and down moves, right? Not those that are trading for a long time. So, sir, we have seen a break of structure, and that break of structure was orchestrated by series of bullish candles. The first bullish candle, the second bullish candle, the third bullish candle. As you can see, now it was able to trade and violated also the highs, also violated our 50 period moving average, right? So looking at the 50 period moving average, the candlesticks are now found above the 50 period moving average. Take note, we have done a break of structure, right, on the candlestick. Then if you look at the MACD is a momentum indicator. The MACD also is already showing us a bullish momentum, guys. So we are already rocking bullish momentum here, as you can see, right? So this strategy is called a MACD ball strategy, right? I think I used this strategy on Wednesday, and of course, we placed it on GPUSD, right? So today too, we are still going to use it, and of course, so the trade we placed that Wednesday, I don't know if you were able to also take the trade using this MACD pulse. So I will just use this MACD pulse to explain the strategy, and of course, the it's actually a break of structure. So it's not that I'm using all. So guys, I think we are back now. I don't know if you can hear me. Sorry, it's the audio issue. It's actually from my end because my network was interrupted. But check now whether you can hear me again. Check again, please, if you can hear me. My network was interrupted. Okay. Okay, thank you, thank you. You guys can hear me. So let me share my screen again. Okay. All right, so back to where we were, guys. We said number one, this strategy is actually we have the move a 50 period moving average. So the candlesticks above the 50 period moving average, that's a buy signal, and of course a potential upward trend. So that means the potential upward trend is already in force, as you can see over here. Then the MACD crossing below the zero line, sorry, crossing above the zero line, crossing from below to above. So if the MACD histogram, these bars are called histogram, if the MACD histogram crosses from below to above, right, it means it has shifted from the sell momentum to a buy momentum. So as you can see, we already have two of it, right? Then also the major part of the strategy is the BOS. BOS. And I told you I have a video on it, right? So most of you that want to watch the video on this, right? And you know one beautiful thing? This is actually a video too, right? Because we are also recording this. So it means if you miss any part of this or if the instructor is too fast, so you can get back to our YouTube channel, Rally Trade on YouTube. Watch the video again, and of course, get value for yourself. Okay. All right, guys. So the major part of this strategy is the market structure, right? So if you watch carefully, this was the last high, right? Now, this high has been violated because we have traded above that high. We have tapped the liquidity resistance above the high, right? So that means the also has been confirmed by our 50 moving average and also by our MACD, right? Our MACD. So guys, another confirmation, please. Can you all hear me? Okay, if you need the video, you can chat me up privately, okay? Thank you very much. So if so let me just go straight, please. For now, this whenever we're analyzing on the H4 time frame, it means it can cover for the H1 time frame and the rest, right? But you are not to place a trade here. So you can only place trade here if you can only place trade here if you're doing a swing trading, right? I mean, you are doing a long-term trading. Now, if you're doing long-term trading, it means you have anywhere above 1 million naira to 10 million naira in your account. So if you have 1 million naira to 10 million naira in your account, then you can trade with the H4 time frame. You can analyze with H4 time frame as I'm doing. Place your trade on the H4 time frame and stay on the H4 time frame. But if you don't have up to if you don't have up to 1 million naira in your account, if you have up to 1 million naira in your account, you have less than that, you can analyze the H4 time frame as I'm doing. Then but you will not place your trade on the H4 time frame. Hello, guys. You will not place your trade on the H4 time frame. You analyze on the H4 time frame, then drop down to a much lower time frame, like I always do, let's say 15 minutes time frame, so that you can pick your entry, bearing in mind what the H4 time frame is doing, right? So that you know whether you are trading a retracement or you are trading the impulsive leg of the market. So, is this name Ekpemska or Ekpemski? You say, how do you know where to draw the lines? You draw the lines from the highs to the low, right? From the highs to the low. If you're having the challenge to know where to draw the line, you can just switch over from the candlestick to maybe the line chart. It will help you. But just draw from highs to the lows. Ekpemski. I like that your name. So see what I did now. Now look at this top. We have one first high, second high, but you notice the third high is higher, right? So what I did was I picked that third high. That's the most obvious high there, right? Ekpemski. Are you still following? So look here also. Ekpemsky, I'm still talking to you. So look at this high, right? Look at this high. So I choose that high. So it is very easy to know the high to use and of course the lows to use, right? So this is the low, right? So this is also a high, right? So if you notice, I've picked this high. But guess what? The candlestick zero, that means this current candlestick may trade above this high. So if this candlestick trades above this high, guess what I'll do? I'll drag this to the new high. So Ekpemsky, I think I'm done with you right now. So since we have broken structure to the upside, we'll be looking out for a retracement, right? So right now, I'm looking for a retracement, right? So what if the market impulse more to the move in an impulsive way more to the upside, right? If the market move up more, I will not take a buy. Because whenever there's a break of structure, if you buy, that becomes a high risk trading, right? And me, I don't like to do high risk trading, right? Rarely do I do high risk trading. The only time I do high risk trading, I will have to reduce my lot size because I know that the trade is a high risk trading. So what I do is low risk, and I advise you also to trade low risk. So low risk means whenever there's a break of structure, you wait. Waiting is part of trading. You wait for a retracement, right? The market should retrace to at least a verified support, or if you like, retrace to this resistance that is now turned support. You understand that very right? So we are waiting for retracement. So we need a little retracement today on Euro USD. So let me drop down again to 15 minutes time frame. I promise that I will be fast. I will analyze a lot of instruments, but guys, the thing is just taking time. I hope you understand. All right. So 15 minutes time frame, guys. I'm actually waiting for a retracement because I've seen a very long impulsive move to the upside. We have broken structure also to the upside. I'm waiting for a retracement, guys. I'm waiting for a retracement. I'm waiting for a retracement, right? So what if the price breaks above this high? You can still take a high risk buy, right? Remember, just follow me the way I'm calling. I'm giving all of these things I'm calling nomenclature. They all have nomenclature. There is a high risk buy, there is a low risk buy, right? So high risk buy is if we trade above this high, right? It shows that there is still higher momentum to go up. Then you can take a high risk buy. Write it down so that you don't forget it. Emmanuel said, if the market trade above this high, right, I can do a buy, but that buy is a high risk buy. So it simply means if you're doing a high risk buy, one of the things you want to do is perhaps reduce your loss size because you know it's a high risk buy, and you have to take the trade to just do a high risk buy. But what about the low risk? The low risk is to wait for further retracement to this resistance on support, right? So wait for further retracement. So if the market retraces further to this level, then we are sure that it will pump up. Now, why are we talking about buy? Why? The reason why we're talking about buy is because on the H4 time frame, we have seen a break of structure, right? That break of structure is a sign of momentum to the upside. So we are we are sure that the momentum is now to the upside, right? And of course, we don't have a high impact news, but we have a medium impact news about around 3 p.m. Nigerian time. So that is also can affect the move, right? That also can affect the move. But remember this strategy, right? So if the market breaks below the 50-period moving average, MACD, and of course, we have a significant break of structure. Right now, I'm not seeing any significant break of structure, right? And this is just one long push to the upside, right? And this whole move is just one long push to the upside. We've not seen any significant break of structure to the downside. So right now, we're going to wait. We're not taking a trade on Euro USD. Let's look at GBP USD. GBP I think I love this instrument, GBP Let's see what we can do here. Guys, now you notice the way, let's just analyze this straight on 15 minutes time frame. Because I know the H4 time frame too must have broken structure to the upside, as you can see. It has broken structure to the upside. By that, I mean, we have traded above the last significant high here, as you can see. This high is actually a significant high. You remember the last time I was here on Wednesday, we were able to draw this, right? We said this is a high, this is a high, this is a high, this is a high, this is a high. And those highs will be serving as magnets. The video is there, okay? So you can go back and watch the video on Wednesday. The video is there, okay? Now, the market has broken above this high, this high, this high. This. So the market is respecting these highs, right? So all these highs will be serving as a magnet for the price, right? And the price actually was magneted towards that level. And of course, it has tapped all the at level to form a new high. Okay. So guys, those guys, okay. So those are broken structures to the upside. So right now, I think the market is about to start riding up. Okay, so let's just drop down again to 15 minutes time frame and see what we have there. So Adewale, you're asking, is Euro USD in uptrend or downtrend? I said in Euro USD on the H4 time frame, so the market have broken structure to the upside. Breaking structure to the upside is upward trend, sir. On the H4 time frame. So you understand that now? So I think you have been asking of GBP, JPY. I will analyze that too. Okay, I can see you there. So this is how it looks like on the H on the 15 minutes time frame, guys. So you can see this was those high that the market broke to. So if we extend those high to the future, this is what it will look like. Extending those highs to the future, it looks like this, right? So that means this level should be a level that buyers will be interested in, right? So that means a retracement to the downside, buyers will be interested in it, right? A retracement to the downside, buyers may be interested in it. But take note, if the market trade below this particular level, right? If the market trade below this particular level, and the news, the University of Michigan news by 3 p.m. on consumer sentiment, if it comes out good for the dollar, it means from here, the market may just start pushing to the downside, right? So if the market breaks below this low for today, take note, sir. Most of these things, just cram it or write it down. Of course, come back again and check. That's how you start building confidence on the analysis. If the market trade below this level, right? If market trade below this level, and of course, the news by 3 p.m., let's say that news comes out good for the dollar. That's the University of Michigan news on consumer sentiment. If it comes out good for the dollar, it means by the time the market is trading below this level, the market must have gathered more momentum. MACD must have turned from a bullish momentum to a bearish momentum. And also we must have seen a little break of structure on the 15 minutes time frame. That means it must have traded below this low, right? So from there, I'm sure the market may just start going down from here. But if the market did not break below this level will be a good level, right? To which price to start taking price to the upside. Now, just like I explained on Euro USD, if during the course of today we see the market break below this high, break above this high, it means you can do your buys above the high, but that will be a high risk buy. Guys, are we following this analysis? So that means right now we're not taking any trade. We're not taking any trade. Why? Because the reason why we're not taking any trade is that we have seen a major break of structure. And when you see a major break of structure on the market, you don't continue that same direction. If you do, that means that's a high risk trading, right? Now, so what is the major break of structure we have seen? We have seen the market break above these highs, right? So the market has broken above these highs, right? The market have equally broken above, as you can see, it has broken above the weekly open, right? So this is the open for the week. Now, remember, today is Friday. The market have broken above the weekly open. So this is the weekly open, right? Now, That would just be expanding this analysis. But it is well, guys. Yeah. Sometimes you just have 1 hour to do this analysis. But let's go in depth a little bit. Let's talk about the weekly open. So the market has broken above the weekly open, as you can see, right? So right now, all of this will seem like a very long week on the weekly candlestick, right? Very long week. So that means the market opens, drop down. So let me show you on the weekly time frame. On the weekly time frame, one candlestick serving as the candlestick for the whole week. So we are having a very long week down here, as you can see. This is a long week down. And of course, the week is already looking bullish because we have traded above the highs. Trading above the high also is a sign of bullish momentum. So these are several ways you can come up with your directional bias, right? So we have traded above the open. So we have traded above the weekly open. Okay. So and trading above the weekly open is a sign that the bulls are back, right? The bulls are back. But we need to close above the weekly open. The next week, we can see Euro USD pumping to the upside, except for the rate cut that we're expecting. So as you can see, this is the weekly open. So I'm showing you several reasons, right? That the bulls are in force. The bulls are in force, right? So all the bulls have the momentum. So we just need a little retracement to the downside here. Okay. Then of course, if we have a bullish engulfing on this level here, so that's also a further confirmation that you can take your buy. So that means you can set a buy limit order. Guys, you can set a buy limit order around this price, anywhere around this level. That will be at 1.31069. 1.31069, guys. You can set a buy limit order 1.39069. Oh my goodness. Oh. So you can set a buy limit order 1.31069. Your take profit should be just above these highs, and that will be 1.31559. Let's remove some of these lines so that we have a clean chart. And so that make it easier. Sorry, the chart was a little bit clumsy, but I've been able to remove some of those lines. So I think it's clearer now. It's easier, right? So I think this level again, let's go that level. So this is the level. So this is the level we are looking at. So our stop loss can just be a very tight stop loss because we have said if the market breaks below this low, the bears may just come in and take the market. So of course, breaking below this level will actually mean trading below my 50-period moving average, okay? So, but for right now, we are seeing a bullish candlestick pumping to the upside, right, on the H1 time frame. So this candlestick may just close as a bullish engulfing, but that is still not enough reason to place a buy trade, guys. No, most new traders are carried away by a bullish candlestick, closing closing above the open. So that's an up close candlestick, we call it. Now, most traders will just go ahead and place a buy. Most persons right now will be waiting for this candlestick to close and place a buy. But guys, we can see that this level is actually high, right? So we will need a price to actually break above this high. And breaking above this high will look something like this. Then you can take a high risk buy. So see what I mean? It should be able to break above this high, right? So I'm breaking above that high is actually what we call break of structure on the 15 minutes time frame. A little retracement will be required before you enter your buy. This same thing happened on Wednesday, right? So we'll break below the low. A little retracement is required before we enter the trade. So, guys, I think that'll be it for GBP/USD. Now, let me go to that GBP/JPY. Mr. Who now has been asking for GBP/JPY. Okay, Mr. Isaac Chuku. He said, please, sir, I cannot see 50-period moving average in the indicator list. Or is it the so you just is moving average you will see, okay? And so if you go to your indicator, on that trend, you see moving average. So it's moving average you use. Then you can edit it and I can change the parameters to 50 period. So that's just what you need to do. So now let's do GBP, JPY, guys. So, somebody have requested for it. So I'm going to honor that request. So guys, this is JPY. Are you ready for it? Let's have it. Let's have it. Let's have it. So this is JPY, guys. So it is either you have a trade on it, that's why you're requesting for it, because I don't think you have natural affinity for JPY. Well, guess what, guys? If you're looking for an instrument that is very volatile, very volatile, it means if it's giving you profit, it will give you profit very, very well. I mean, it will keep going your direction very, very well. That kind of instrument that you want to place a trade and, of course, start calling all your vendors and start telling them to send whatever you guys have discussed because the money is already ready. That's the kind of instrument. But remember too, if it's going against you, it can also move very well against you. So of course, stop loss will be there to limit or to reduce the risks. Okay. So guys, this JPY, if you have a trade on it already, this analysis is for you. If you don't have any trade on it, this analysis is equally for you. So let's start from the H4 time frame, guys, and let's try and establish what we call directional bias. Okay. Let's try and establish what we call directional bias. Directional bias. Now, from our directional bias, let's look at the week before this week, right? Now, on this JPY, my chart is divided into columns, as you can see. From here to here is one column. From here to here is another column. From here to here is another column. And each column represents activity for 1 week, right? So let's look at the week before this week so that we can establish our bias. Now, this analysis is for those that already have trade on it, right? So from here, this is the weekly open. As you can see, we traded upward, right? So that the market can do what we call trappings, right? So the market traps most traders here, right? Now see how the market used to trap traders. Okay. So watch this. So So if you watch, we had some highs here. So these are the highs, right? So if you watch the market trader above those highs, just like I explained earlier, so anytime the market is creating relatively equal highs, the market is creating those highs so that it can have some liquidity. Remember, the market moves in the direction of liquidity, right? Liquidity is money. So in the direction where there is the highest money, or if you like the highest bidder. Okay. So the market had to clear all of those highs, right? If the market did not clear this high, the market will be coming back in the nearest future to clear this high. Okay. So this is a high for a week, the high for the next week, the high for the now 3 weeks high. The market was able to clear 3 weeks high, right? Then before it started going down. Now take note again. Take note again. So this is the weekly open for last week, right? And of course, so the market is now trading below the weekly open. So that means last week was bearish. So if last week was bearish, sir, what do you think this week may likely look like? If last week was bearish, what do you think this week may likely look like? May likely. So that means it's still under probability, right? So it's just like if it rained yesterday, what do you think today would be like? Most person may want to guess it may also rain today, maybe 60% chance, right? So long story short, guys, for this week also, we opened here also, right? We traded high again, just like what happened last week. And of course, we traded low. And right now, the market is trading below the low of the open of this week. So this week may also close bearish, as you can see right here. Why? Because we just have today, and today is the last day of the trading day, right? So if you watch carefully, this is the open for the week, right? So this is the open, and of course, we are trading below the open. So if you're trading below the open, it means we have more downward momentum. And of course, if you look at MACD has been bearish, right? Right from last week. The candlestick has been trading below my 50-period moving average. So everything is just showing us bearish. Guys, now let's look at our break of structure So if you look carefully, we have been trading this way. The market has been printing for us lows and of course highs. And of course, lower lows, we crush this low to form a new low, guys. Let's use this other low because it's significant to me. So we retrace high, right? So this is the retracement. So we crush that low again to form a new low here, right? So we did what we call a shift, right? So we have taken above this high to form a new high, right? But that shift is actually a loss of strength, right? So then we now traded again to this level, right? So let me drop down to 15 minutes time frame. Then I'll give you precisely what to do. So if you have a trade already on a sell on GPJPY, your trade should still be open, sir. You don't close that trade. If you have a sell trade running on GPJPY, don't close the trade, okay? But if you have a buy trade on GPJPY, you may still want to wait a little bit to see whether the negative will reduce before you can close, right? Because we saw that the market was going down there, guys. So look carefully on the 15 minutes time frame. We've had our shift to the upside, right? Shift to the upside, which indicates a loss of momentum, right? Loss of momentum. But guess what, sir? Watch carefully again. Let me draw 15, now for 15 minute time frame. This is the one that should interest you the most. The reason is most of traders here are day traders, right? So watch, we traded below this low to form a new low, right? Is it not? And of course, we traded to form a new high. Very, very confusing. But watch the latest price action. We are traded below this low right now to form a new low. So, sir, trading below this low to form a new low, right, is a shift to the downside, right? Trading below this low to form a new low is a shift to the downside. Then we've seen a retracement again to the upside. Is it not? Okay. So those of us that may be interested, right? So we may just want to see the price trading to the downside, right? Because the MACD is already showing us bearish momentum. The candlestick are already building below my 50 period moving average, right? So that's already a bearish momentum. So the only thing holding us back is we are currently rocking what we call a local support, right? So you wait for the market to break this local support, then you may want to take your sell trade. So the candlesticks are now, we've already done the break of structure. Take notes. We've already done the break of structure number one. The number two, the MACD momentum bar, right? The MACD histogram bar is just is below the zero line, as you can see. So the only thing holding us from taking a sell trade is, if you look carefully, the market has been battling to break through this level. The market has been battling to break through our level, and that level is 185. Okay? The market is battling to break through 185. So if you watch, this was the first time it had that run, right? So this was the first time it tested 185. It went back again, came back again to test 185 again. So the market is trying to break 185, went back again. Guys, this one is becoming too much, but you understand it, right? So the market is trying to break to this level. And because of that, if the market is trying to break to this level, we are not to enter a sell. You don't see a moving train and jump into it. So what do? You wait. Wait for the market to show you that it has the capacity, or if you like, the momentum. So, sir, if the market breaks through this 185, please take a sell trade. So if you like, you may want to set a sell stop just around 184, right? Set a sell stop 184.898. A sell stop, sir, do a sell stop, please, at 184.898 with a stop loss at above this level, a very tight stop loss, 185. Okay. Do a stop loss at do a sell stop rather at 184, right? 184.898. Sir, a sell stop rather a sell stop at 184.898, a stop loss just above my 50 period moving average, okay, at 185.662. Then if you do that, your take profit, by the time you know your stop loss distance, your take profit should be times 2 of that distance. So let me measure it for you. So I say do a sell stop around this level, then do a stop loss at this level. Times 2 of that distance, it's going to take out this low to form a new low. So your take profit can be at 183, guys. 183. Now, this analysis is because we have seen on the H4 time frame that the market is actually going down with the retracement. Then we have equally seen on the 15 minutes time frame, we have broken structure to the downside, right? And that's a show of momentum. Guys, we have a stop loss here to protect our trade. So let me look at the comment section. I think I've been able to honor that request. So I think I've honored that request. So you're asking what is my name? My name is Emmanuel. I'll drop my number at the end so that maybe you can chat me up. Okay. So for those of us that are requested for the strategy, right? This strategy is called MACD box. Okay. That means we are using MACD for momentum. Then we're also following the break of structure aspect of it. So I think let me do gold real quick. It's already past 9. I promise to analyze a lot of instruments. Though. Let me see how I can redeem that promise. So gold real quick here. So let's just start from H4 time frame real quick. So if you see here, gold was also able to break through all of these highs. My God. So guys, gold was able to smash through all of these highs, as you can see. We have taken these highs, we're taking these highs, we're taking this high. What do we call that, please? Trading above the highs. What do we call that? This is actually a comprehensive break of structure. I can tell you that. So that means the upward momentum is in force, right? But since we have seen break of structure, I would like to wait for a retracement. Very simple analysis. Remember the last time we were here, we said gold is riding a range, right? This is a range. This is a range. But guess what, sir? We're out of the range. And that range lasted for first week, second week, third week, and of course, the fourth week, we broke out of the range. So gold actually has escaped the range, right? And it's trending to the upside. And it did that with the break of structure to the upside. So I will drop down to 15 minutes time frame. So on the 15 minutes time frame, what am I looking for? I'm looking for local support so that I can take a trade, right? And of course, use this MACD ball. So MACD is clearly showing us a bullish momentum. Then, of course, have we had break of structure to the upside? Of course, the market is running to the upside, right? So I would like to see a retracement, a significant retracement before I will continue buying. So I wouldn't like to buy at the overbought area. So the market has equally done a lot of break of structure to the upside. So at this level, I would not like to place a trade, a buy on gold. Should I sell? I would not equally like to sell, right? I would like to wait. Right? I would like to wait and see what gold will do. So if I'm waiting and gold starting to the downside, wonderful, right? If it goes starting to the downside, I was able to trade below my 50 period moving average. Then, of course, if my MACD during the course of the day will follow this analysis, please. If the MACD crosses below the zero line and start forming histogram below the zero line, then of course I can now consider taking a short sell, right? A short sell, right? That would be a scalping to the downside. Stop loss just above this high. Take profit times 2 of that distance, guys. Then that's for gold. Otherwise, guys, if you have a buy trade on gold, leave that buy trade open, please. You have a buy trade on gold, your buy should still be open because what are we seeing here? We are seeing the market pump into the upside, right? So you just need to wait for retracement before you can enter. So guys, I think it's already past 9. Uh, So my name is Emmanuel Odogu. Okay, Emmanuel. So my number is 09026264507. So the kind of analysis we try to do here, we do it in such a way that you are already armed, right? With the armory, if you like, the arsenal that you can use to look at more instruments for yourself and analyze it, okay? So I've dropped my number there, guys. Please, uh, 09026264507. Guys, thank you very much for joining us for today. Join us again on Monday for another exciting analysis. Bye for now. Okay, if you need that video on the MACD, please chat me up now. Buzz my phone on WhatsApp. Guys, thank you very much, guys. See you on Monday. Bye for now.